So if you look at the 10-year average, it's sitting around 12,500. So if you look at how we ended up, still our fourth best year on record. The forecast for this year is really more of the same, which I think is a good thing, that we, hopefully we'll see a little bit of a rebound in residential detached sales as they fell off 2%. And are kind of under the, closer to the 10-year bottom average instead of the top level, which we achieved in 2007. So it'll be interesting to see how that unfolds. Condos, certainly very bullish on them based on all the new projects we're seeing and the participation with these developers and our members on the MLS system.
Economic growth, population growth, employment growth. There are some outlier factors like what's going to happen to interest rates, what's going to happen to the Canadian dollar, being it now dropping, how does that affect the economy?
We're forecasting increases of 2 to 4% in the number of housing sales. We think value will be increasing also. Condominium market is quite prevalent with a lot of new starts throughout the city, offering good growth and diversity in selection.
We're seeing just a lifestyle change happening, I think, in Winnipeg, more maturity in terms of valuing what condo lifestyles offer. So there is that change and dynamic going on as well, where people are just saying, I think I'd prefer a condo lifestyle, whether it's the empty nesters or some of the young up-and-comers that are looking for maybe a more urban lifestyle than out in the suburbs. Our Winnipeg is the new long-term plan for the city of Winnipeg, and there is very much emphasis on more mixed-use development through more enabling zoning to achieve that goal. And now you're seeing developers pick up on that opportunity, and the Grant Park Pavilion would be one example, but you're going to see a number of others that are closer to the downtown but still offer all the other amenities of some commercial space and activity and retail along with living accommodations.
Major priorities will be in the Shed District, ensuring that the SOPO site gets off the ground, continuing on with the Convention Center expansion, additional residential and commercial development in that area, as well as in the Exchange waterfront area, supporting the residential development.
We're not necessarily a head office city, so we're getting a little bit of just moving it's like a shell game from tenant going to one building to another, but certainly there are still some new companies coming and companies expanding. Industrial is very robust as well. The vacancy in industrial is very low. With interest rates remaining low, there's fierce competition for investment-grade real estate. Maybe the wild card in this whole thing is going to be the opening of the Canadian Museum for Human Rights, because no one, I think, really understands the impact, the full impact of what that's going to do to the city, because it's going to be a great economic stimulator.
There's a lot of interesting things going on in terms of some of the price pressures on some residential detached properties. And some resistance at some of the pricing, as we saw that level off in some areas of the city. The strength of the condo was very apparent, especially new condo projects really came to the forefront in 2013. So again, I think they need to be talking to the realtor about what their particular situation is and how they need to be prepared to act on a market that is in some ways a bit of a state of flux. With the increasing prices and possible other factors going on in the local economy.